Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, February 4th, and it's around 6 p.m. New York time. So we're going to have a busy end of week here with economic data coming in pretty regularly. Tomorrow, which is Wednesday, we're going to get ADP. That comes at 8:15 a.m. Eastern, and we're looking for 150,000 jobs to have been created. And then, of course, at 10 a.m. Eastern, we're going to be getting the ISM services, looking for 54.3. The big number that everyone will be really paying attention to also is this services prices paid, because that spiked to 64.4 last month, and that was very hot, very much a surprise. Then on Thursday, we're going to get unit labor costs. We're looking for 3.4%, so a big jump from 0.8. Productivity is expected to sink to 1.4% from 2.2. Of course, jobless claims always a big event. 213,000 of the estimates, basically flat to where we were last week, and continuing claims 1.874 million, up about 20,000 from where we were last week as well. This has been a pretty steady number over the last couple of weeks in terms of just trading within a range. And then, of course, on Friday, we're going to get the big show with the non-farm payroll report. We're looking for 170,000 jobs who've been created, an unemployment rate of 4.1%, average hourly earnings 0.3% in line with last month. Average earnings year over year, we're looking for it to tick down to 3.8% from 3.9%. And then, of course, at 10 a.m., we're also going to be getting University of Michigan, looking for 71.1. And the number that I'll be paying attention to a lot is the University of Michigan 5-year inflation outlook. And again, this is an important number just because we're trading at the very upper end of the range at 3.2%. So this is obviously all going to be very market-moving news, and it's going to probably shape a lot of where we go over the next couple of weeks at least. And when you look at the market, you can kind of get a sense of something's going on and we're at an important inflection point. Because at least, again, when you look at the euro, we're at the 61.8% retracement level, and we've talked about this being a very important level of support now, really going back to the middle of January. You can see all the way actually in the beginning of January, we've been testing this 102, 103 area, and it continues to hold. Again, you can clearly see and make out this, sort of rounding on the RSI, and the start of looks like it turned higher. You can also make out a case that maybe there's like some sort of inverse head and shoulders forming here on the euro. And you could make a case and make a very strong argument that the euro is trying to put in some sort of bottom and potentially could be heading higher from here. Really, the big hurdle from a resistance standpoint right now, you can clearly see the big downtrend in the euro broken. The next major hurdle comes at this 10-day exponential moving average, which we talked quite a bit about. And then, of course, it's going to be on and up to perhaps 106 if you can get above this 105 region. So the euro is starting to look a little more constructive than what it's been. And again, there's a bullish case here to be made that perhaps the euro can strengthen. I don't know if that means that the economic data comes in weaker than expected. I don't know if there's some sort of other news going on, but that's what it looks like, at least when you look at it from a technical basis. Obviously, a break of 102 is a big negative sign and sets up a risk of retesting parity and potentially going back to just 0.99. When you look at the pound, it continues to also look that way as well. You can clearly see that the pound is also trying to make some sort of churn on the RSI. Here's your big downtrend. That's been broken. Again, you're above the 10-day exponential moving average now for really going back to the middle of January. So there's certainly a case here as well that you could see the pound continue to extend and move higher. Again, a lot of this is going to be dependent upon, what the BoE says later this week, and whether or not, they kind of signal whether a more hawkish or more dovish outlook. Clearly, anything that suggests more rate cuts in the market is pricing in, probably going to lead to a pound moving down and weakening further versus the dollar. But as long as the BoE probably stays steady and doesn't really hand the market any dovish surprises, I think that probably will allow the pound to continue to strengthen, move up towards this 126.30 area. When you're looking at the Japanese yen, again, this actually looks like it's due to strengthen a little bit too. You can see we're just sitting here on support at this 154.40 area. You can also clearly see RSI turning lower. We're also drifting lower and kind of using that 10-day exponential moving average as resistance. So again, you can make a case. Maybe there's a descending triangle forming here. Maybe the yen's heading towards 150, 140. And that would be strengthening. Again, you have all three currencies looking like they could strengthen versus the dollar. and what exactly that means in terms of what the data, what's the fundamental trigger that perhaps causes that. I guess we're going to be finding out probably later this week. When we look at things like copper's been also showing signs of strength. You can clearly see we have like a little bit of a turn here on the RSI. Here you can see copper's also showing signs of turning higher. I guess you could also try to make a case, or a very weak case, that you have some sort of inverse head and shoulders pattern forming here as well. Again, it looks like, again, weaker dollar would certainly allow for copper to continue to rise and head towards that 460 area. And oil is also very important, again, because, we know that oil's been trying to get itself together. It's trying to hold really hard around this $73 a barrel mark, although today it caved a little and now bounced back. So the longer oil probably consolidates and the longer oil probably hangs around 73, I think the more likely it is that oil is going to probably continue to move higher, at least from that technical standpoint. If you're going to see the dollar begin to potentially weaken, that could be a reason for oil to actually move up. When we swing over to the DAX, there's really not much to say here, just because the DAX continues to defy a lot of logic in a lot of different ways. This has been obviously one of the stronger indexes globally speaking, and certainly you can see that the DAX continues to hug. It's basically been trading, when you look at it from a technical perspective. I mean, it's really been trading a lot with the 10-day exponential moving average serving as support and the upper Bollinger Band serving as resistance, and it's just kind of trading in that range. And that kind of tells me that probably the DAX still has some further room to extend, maybe towards 22,100, with your downside support somewhere around 21,530. A break of that support could lead to a decline to the 20-day, but you can also see that on a couple of occasions when we tested the 20-day moving average, we ended up going below it and finding support actually closer to the lower Bollinger Band. So that would be something to watch, obviously. If we break this 10-day exponential, let's say we gap lower tomorrow or gap lower on Thursday, that would certainly set up a potential test of somewhere in this region here. I would think around 20,400 on the DAX, but hard to fight the trend in the DAX at this point. When we look at the FTSE, that's also found some good support at this 10-day exponential moving average. Also been trading really right along and up on this upper Bollinger Band. For the most part, we've talked about for a very long time about the relationship between the FTSE and copper prices, and that's still, for the most part, it's not as strong as it used to be, but still for the most part, that relationship tends to be there. So I would again think if copper heads higher, maybe the FTSE heads higher. The one thing that I would note is that, you are starting to get some signs that maybe the momentum is starting to fade a little bit, but I think barring a complete breakdown of the 10-day exponential moving average, I think you have room to potentially run up into this 8,000 and 8,750 region with a break of the 10-day, potentially setting up a retest again somewhere around 8170 or so at the lower Bollinger Band. When we look at the NASDAQ, it's been a little bit of more of a choppy sideways motion, really with no clear direction. You can see for the most part, that's really been the case, call it all the way back since the election. And, this was the July high that we saw, and you can see we really haven't done much of anything since then, despite, a lot of bullish sentiment out there. And so it looks to me like right now the upside continues to be somewhere on the NASDAQ, somewhere around this 22,000 mark. There's the chance that you're starting to put in lower highs here, so I would maybe think your upper end of resistance comes somewhere around 21,900, and the downside is probably somewhere around this 20,750, which clearly served as support the last time around. So right now it looks like we're just in sort of this ping-ponging back and forth pattern for the NASDAQ, and until one of these levels break, whether it be to the downside or the upside, I think you're just looking at a range-bound market, and I think it's a very similar case for the S&P 500. Again, you're kind of stuck between this 6,100 level to the upside, and you're stuck somewhere in this 5880 area to the downside. The last couple of times we've tested it, that's where we managed to find support. You could see it here. You could see it here. We got down below it here, but we came back very quickly. And I don't really know that there's much else to say at this point on the S&P. And on the Dow, it's a similar look. I mean, the Dow has certainly been much more volatile than the other indexes. And we have this big, you have this big drop followed by what looks like a double bottom and a reversal back. And then to only get all the way back and then to stall out. So right now, I think until proven otherwise, our resistance on the Dow is somewhere around 45,100. I think again, you have the risk really here of potentially even coming all the way back and testing this lower Bollinger Band somewhere around the 42,000 area. I mean, today we barely closed above the 10-day exponential, and you could certainly see that 44,530 is serving as a little bit of a resistance zone. I mean, that's been the case for the most part going all the way back to mid-November. So again, perhaps there's a little bit more room here to the upside. Perhaps we come back and test 45,103. But again, when you kind of also take into account that you're seeing the RSI kind of flatten out, kind of tells you again also momentum getting lost a little. So a very close eye on this 45,070 area with maybe upside at 45,650. Anyway, have a great rest of your week and we'll see you next. Bye.